Hi guys, welcome back to my another YouTube video. In this, we are gonna discuss about shares and securities, okay, from CGT. So let's start. Okay, all right. So first of all, in for the purpose of the capital gain tax CGT purpose, how will you compute the shares and securities for the how will you tax the gain on the shares and securities? Okay. So before jumping directly onto that, let's see how will you value your shares and securities. If your shares is an unquoted from an unquoted company, which is unlisted company, then the market value of the shares will be given into that question. You'll use that market value and multiply by the number of the shares. Okay. When it is a quoted company shares, then you will take mid price of highest plus lowest divided by 2. Okay, which is average, right? You will take the mid price of it. Okay. Now, uh, whenever you are disposing, so you all know we consider CGT whenever we are disposing an asset, right? So during the disposal, you will compute it like same for the same day. What if the purchase shares you done in the same day on the same day, you'll deduct it against that. Okay. And for the following 30 days, you'll deduct on the FIFO basis, first in, first out, which means suppose this is today, it's 20th October. Okay. I'm considering 30 days from 1st October to 30 October. So whichever shares came on first will be deducted first. Okay. And whichever shares came on 30th will be deducted last. Okay. Now, uh, just a second. Okay. Now, after doing this, you have some shares. So how do you purchase shares? You don't purchase like all the shares on one day. You keep purchasing in the shares. What happens? You keep purchasing. Some shares you purchased 5 years back. Now, if you feel it's a good time to purchase, then you'll purchase it. And whenever you're disposing. So the shares which are not qualifying, like which are not deducted under these two, will be deducted from the share pool. Okay. So let me show you how will you make the share pool. Share, which is share pool. Okay. What happens? Here you have to write the cost of the shares. Cost of the shares, cost and number. Before that, okay, just a second. Let me show you how you will complete the whole question rather than just showing share pool. Let me show you how will you complete the whole question. Okay, write the disposal proceeds. Disposal, like let's suppose it's of 1,000 shares and the disposal proceeds received is 10,000. So same day, let's say today is 20th October. Okay. Uh, yes. On the same day, if there is any purchase of the shares on the same day, then you will consider it, then you will deduct it against this one. So suppose there's 100 shares and it's for, let's say, 2,000, which makes it 8,000. Okay. And this is again 9,000 shares. I'm just taking an hypothetical example. Now you have following 30 days. Okay. Following 30 days. 30 days. That too in the FIFO method, FIFO basis. First in, first out. So suppose you purchase shares on following 30 days, that is going backwards, okay? Not going front, like not going uh, before 20th October, before today's disposal date. So let's say you purchase some shares on September, on let's say 25th September. So you'll deduct those shares against this one. Suppose you purchased 50 shares. Okay, that too for I100. You'll deduct this value, which is 850, and this is 7500. Okay, this is your value. Means disposal proceeds for 850 share is 7500. Now considering the fact that for the every share pool, suppose you purchased shares a long time back, you also purchased some shares on 2023, 22, okay, and 2021. So you'll write the cost, okay, better way, write quantity, just to follow this, whatever format you follow, quantity and the cost, okay? Whatever the quantity is and whatever the cost is, you'll total it, okay? Now, logically, how many shares are you left with? You need to find out the cost for 850 shares, okay? Remove this disposal proceed, I'll tell you. Okay, 850, you need to find out the cost for the 850 shares. Now, total this quantity of the shares and the cost of the shares. Now, if whatever the cost you get, suppose you get whatever the cost you get, let's say X, okay, and X A quantity. A is the quantity and XX is your cost. For let's say this number of shares, your cost is this much. Then how many shares, what is the cost of the 850 shares? You will cross multiply it. Okay. So let's say here you get 2000 shares. And for this, your value is again 10,000. Your cost is 10,000. How much for 850 shares? Cross multiply. Sorry, you'll do it cross multiplication. Okay. 10,000 divided by 2000. So whatever value you get, that will be your this cost. Okay. And then you will find out the gain. Here, whatever you get, that will be your gain. So 500 minus 2000 minus whatever this value you get, that will be your gain. So I recommend you guys to solve one question. Solve ACCA study of questions or your exam kit questions. That is fine. Okay. Now that was for individual. Now there's little bit difference, slight difference for your companies whenever for corporation tax part. Whenever you do for companies, there's only a slight difference. Same day purchase will deduct the same way following 9 days. Here it is 9 days instead of, see this, instead of sorry for that. Instead of 30 days, there is a 9 days. Okay. And the share pool will be the similar way. Okay. Now, you have bonus shares. Okay. So now, whenever you add bonus shares, if a company issued bonus shares, then in your share pool, the shares will be added, but the cost will not be added because bonus shares is the shares you get for free. What happens whenever the company cannot give you the dividend, at that time, usually they give you bonus shares. Okay. So bonus shares you get for free. So you'll not add the cost, okay, but you'll add in the shares. Then your cost will also differ because it will be averaged, okay. Now, when you get the right shares, here, yeah, right shares. Right shares, you will treat it as a normal way as you treat your normal shares. For right shares, what is right shares? I'll explain. Before, suppose a company wants to expand, okay, and it already had, hmm, just taking a small hypothetical example, in the market, company issued 100 shares, okay, and I purchased, let's say 50 shares, okay, which is the ownership is 50%, okay. Now, if the company wants to expand, they need more money, they will issue 1,000 shares, okay. To maintain this, so I'm considering the thing that they will issue additional 900 shares. 900 shares, okay. So they'll issue additional 900 shares to expand. Now, if they issue 900 shares and I have only 50 shares, then don't you think this will be a like problem? Because I'll ask to the company that whenever you were small, I had 50% of ownership. Now you're expanding and I only have 50 shares. Then my ownership will reduce because totally it will be, in total, it will be 1,000 shares. For 50, it's 5% ownership, right? So my ownership will decrease. So to avoid this problem, what company do, they issue right shares. They give right shares at a lower price to the existing shareholders or to the employees. Okay, so that if I want, I can purchase the shares. If I don't want, I can sell my right. So if I sell my right, there's also rules given which you have to follow. Okay, so considering the situation that I purchased some shares to maintain my ownership percentage or the voting right percentage. Okay, so if I purchase shares, then this purchase will also show here. This purchase will also reflect here. Here, if I purchase some shares in the previous years, then cost will be at lower price, but the cost will be added and the quantity will also increase. Okay, and you get shares on the proportion, like you get on the proportion basis, like 2 for 1 or 1 for 2. Suppose you had normal equity shares, 1 for 2 is 1 share for 2 already held. Okay, so 1 for 2, whatever the shares you held, so it will be 1 for 2, yeah, 1 divided by 2, whatever the shares, number of shares you already had before that day. Okay, on that basis you will get the shares. I hope it's clear till now. Now, suppose instead of purchasing the shares, if I decide to sell my rights, if I decide not to purchase shares, not to take shares, instead sell my rights, okay, to someone else, then that particular term is known as sell of right nil paid. Okay, this particular sell of right is treated as a capital distribution or part disposal. Okay, now what happens? Whatever your cost is, you will multiply this cost, multiply your rights sold, divide by rights sold plus rights retained market value. So in short, total. Whatever the cost, original cost to purchase the shares, multiply cost of rights sold, RS, okay, RS plus market value of RT, rights retained. So in short, it's total, right? Total market value. You have to take the average. So you will deduct this much. You will deduct that value, okay, from your shareholder. And this gain, whatever the gain you have, this will be deferred. Now, there's one more treatment you can do is this sale of the rights can be treated as a small part disposal. Now, there is a difference between part disposal and a small part disposal. So that you will study in the very first of your CGT, okay, and SPD. What happens here also, if I sell my asset in parts, suppose I have 2 flats or a building, suppose I have a building which have 5 flats. If I sold one flat, okay, and whatever the gain I get, okay, I'll deduct this gain from my next flat. And in small part disposal, you don't qualify for gain. Okay, for example, let me explain this in a better way. I have a building which has 5 flats. Okay, this cost me around 1 million. Okay, now if I sell one okay, I got disposal proceeds. Let's keep it TP, and the cost was 0.5 million. Okay, now all of these homes are not same. Some of them are 3 BHK, some of them are 2 BHK. What I'll do, suppose I sold one home, one flat, okay? So DP of the one flat minus cost. How can I get the cost? I'll prorate it. How will you prorate it? Total, the same way, total divide by uh, market value of the home which you sold. Multiply the cost, total cost, because this will give you the proportionate, right? So you will get this cost here, and this will be your gain. Okay. Now what happens? My total cost was 0.5 million. Out of 0.5 million, my one home is lost, like one home is gone. So my cost should also be gone. So I'll deduct the cost of this much. So this cost will be deducted from my 0.5 million. And I'll get the cost of the remaining 4 homes, okay? 4 houses, okay? Now this is the process of part disposal. Now let's see what happens in your small part disposal. In small part disposal, what happens? Uh, Instead of calculating the gain here, the whole gain will be calculated towards the end whenever you sell your whole property. Okay, that's the difference between the small part disposal and the part disposal. Now for this rights, okay, if your proceeds are less than or equal to 3,000 or the 5% of the total shareholding, then only it is considered as a small part disposal, or else you'll consider it as a part disposal. Okay. If it's a part disposal, you'll calculate gain now. If it's a small part disposal, the whole gain will be deferred at a future date. Okay. And yes. So yes, that's all. I have covered whole shares and securities portion. In case you have any queries, you can post your queries into your comment section, or you can also reach out to me through LinkedIn profile. I'll paste the link. Okay, and I'll be sending I'll be pasting I'll be posting some questions into the community section. So please stay tuned. If you like my videos, if you want me to make some more videos on this, or if you want to make some videos on some particular topics, then also you can let me know. I'll consider that. Okay. If you like my video, please like, share with your friends, share with your study buddies. Okay. And let them take benefit of it. And please subscribe to my channel. So yeah, so that you can get more such content. Okay. That's it about it. Thank you so much, guys, for watching this. Bye bye. Have a good day.